What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily content as well at Hemi137 on X to give you a pulse of the market. So let's go over this past week. Now, this is something I've been talking about for a while, and what I think is really interesting is that ever since the back half of last year, when essentially Fed Powell kind of pumped the market, and then coming into this year that we would have a bunch of cuts, that things were going to be okay, and then coming to find out after we had that first earnings, we saw that that was essentially not the case, that things were getting much worse, much faster. Is something I've always talked about, is there has been a delay in how these interest rates actually roll out, because you essentially you do have interest sensitive items like housing, automobile loans, stuff like that, but ultimately uh, understand that you have other loans that you have to wait till they become mature before they actually have any kind of impact on the market. And so, with that being said, we're starting to see that really play out. We're starting to see, especially after that first earnings of the year, the massive amount of layoffs have been rolling in, bankruptcies have been rolling in, delinquencies have been adding up, debt is stacking up. People are liquidating any funds that they have. They are acquiring an additional job or two, only to still be broke. But yet, inflation is moving up. And this past week has shown us that, as we had core inflation, which has been up for 2 straight months. Again, a lot of the inflation reports I've talked about, they are heavily manipulated, and understand that all the inflation's in food, shelter, and energy, because people are just trying to survive at this point. And so, with that being said, what you're getting is there was a big uptick. I think the biggest uptick over this last core inflation was transportation, and airlines in particular have been extremely expensive, as we're continuing to see the whole story with Boeing play out, which is crazy. But nonetheless, something what I've talked about. This is why this company is backed by the military, because essentially they produce a lot of planes and stuff for the military, or backed by the government, I should say. And so this is why it's still a $200 stock when it should be a $5 stock. So with that being said, um, we also had the core PPI that came out that was double year over year. So the inflation is still very rampant, and there's a lot of different ways you can approach this. There was a carbon tax that was essentially applied to, especially food as well, and you have to understand that with what went on during the pandemic has really caused a lot of issues in general. But since then, we also have the carbon tax. So every time, again, there's a transaction, you get a carbon tax added. So, and to be able to be profitable, which I think the margins for farmers is extremely low anyway. But with that being said, you know, somebody has to pay that cost, and that cost comes to the consumer. So not only is there a carbon tax for every exchange that it goes from the farmer to the produce, and then to be packaged, and then to be shipped, and then to be put in stores, and then for you to buy it. So it's taxed like 4 times by the time it gets to you, and then you get taxed when you purchase it. So this is essentially what's adding to some of the inflation as well. So there's a lot of issues that are causing inflation. And then again, understand that to be able to reset this thing we're going to have force it into a very hard landing at this point. And again, the inflation is showing that, because now what's happening is, we're thinking maybe May, June, we might get a cut. Now it's like, well, when are we going to get a cut? And it's pretty much Powell saying that, I'm not really expecting one maybe this year. You kind of get a hint of the fact that he knows he's going to have to cut, but he doesn't, if he didn't need to, he would not cut. And that's essentially the scenario that is playing out, is that the only reason he's going to cut is because there's going to be a major event. And something I talk about, this is always how it happens, is it's not going to be scheduled. their essentially game plan is to push it as far as they can because of necessity. They're going to have to keep rates high because inflation is coming back, and it's starting to seep into the second month here, where it's starting to not be seasonal anymore, and so it needs to quickly correct, or we're going to be in for a hard landing. Something it just happens, right? It's just part of the cycle. So you can wordsmith it however you want. Ultimately, understand that it's still very much a big problem when you start looking at inflation and what's happening to the market. And one of the biggest concerns being is, we talk about a crash all the time, but you have to understand that it could lead to hyperinflation, which means the market crashes up. And if you're not in the market, right, you could be left behind, right? And then your dollar becomes worth less and less and less. And so with that being said, again, puts us in a very interesting predicament as of right now. You talk about how the Roman Empire essentially fell. It took not only 100 years, but it took time for it to essentially roll off. And that's kind of the same scenario we've been compared with, is that it's going to take time. And people talk about BRICS. BRICS is a hot mess, in my opinion. They're attempting to get out. Yes, they've been doing this for a while. But again, ultimately understand that, again, it's still going to take a long time. And even though they may be checking out and trying to change with other currencies other than the dollar, it's still going to take time, right? A lot of people are holding debt. They're trying to get rid of debt, but it's not going to be that simple. And so with that being said, it's also what leads to wars. And so this is why we talk a lot about being on the cusp of war. Not just what's currently going on in the world now, but that threat of potentially a Cold War that we got going on in the race to AI. This is why AI has been so hot, and then that leads into a couple other different things that potential cybersecurity and some other things coming in the near future, and more so aiming to 2025 after the election. So. But this past week, we also did get the extinction of the Fed banking term funding program. So this essentially, again, it's not going to be an immediate thing. You have to understand that you're just not giving out any new help or loans now is what's happening. And so people will still have that money that they've borrowed. And then when they run out, they're just not going to have that option anymore. And so at this point, you have to understand there's other option pools. This is kind of an emergency thing to help them buy them time for a year since SVB went down, to try to gain footing. And you've noticed over the past year, yes, there's some banks that's they still lost some banks. We've lost the bank like just about every quarter. We almost lost New York Community Bank here again. And then they injected another $1 billion in it to try to save it. So they're doing whatever they can, but ultimately understand. We had Powell just the other week say that he knows that there's going to be more medium to small banks out there that are going to fail. And so you have to keep this in mind. And so with that being said, you have all these different things going on that side of the house, and they're trying to help prepare for what was coming on Monday. And that, yes, they've been closing bank branches over the past couple months. So they've been preparing to pull this bank term funding program away. And now they will protect the big banks at all costs, because if the big banks go, there's nothing left, right? We reset the clock, and then it's all chaos at that point. So what they're trying to do, again, anytime these cycles happen, it's always the end of the world. So you have to keep that in mind. So that shouldn't stop you from taking positions or whatever the case, because if it's going to get bad, it's going to get so bad, it's not going to matter whether you take a position or not, right? So with that being said, we will see what happens with the bank term funding program, but like I said, that's gone. So we'll start seeing more exposures, start seeing more banks fold. And again, at some point in this year, again, we're still waiting on that linchpin of when the Fed cuts. And again, that's going to be because some major event is going to happen. Again, we're seeing a very quick uptick in layoffs. And that's what's important going forward, and what we should be expecting going forward. So We'll have to continue to watch and see how that plays out. But that's pretty much what we had over the week. So we didn't have a lot of news, but we had good news. We know the fact that the rates are, in my opinion, the rate, again, like I just said, in my opinion, the rates are just going to remain high until something happens. And that's the only way that's going to force the Fed to cut. It's not going to be a scheduled thing, in my opinion. You can't schedule these things because you don't know what it's going to be that's going to break. All right. And let's hope it's not a black swan event that we didn't see coming. Not that it matters. We're kind of preparing for it anyway, but if it happens, it happens. And we are starting to pull back this week. We've seen that over the past week. And I've told you March is essentially the month where it pulls back anyway. But what is interesting is we got another big week. Now, this is another big week before we roll into earnings cycle, which is roughly another 2-3 weeks away. So we'll be quiet after this week. But like I've stated, ever since we've had our first earnings, there's still been massive news as far as layoffs. So that has not stopped. That started since the beginning of the year and it's continuing even with these lull weeks when nothing has essentially been scheduled. So, but this week we do have a big schedule. First big thing on the board is we have Nvidia conference Monday through Thursday. You're getting more AI hype, so much so that the options contracts for Nvidia for this week are absolutely absurd. But you can't, it's definitely risk management, keep in mind. But if you do want to play Nvidia, it's better to look for essentially other semiconductors out there or infrastructure plays this week, as opposed to trying to get Nvidia directly, because they got so much priced in. You're not going to make anything off of Nvidia. Like Nvidia has to move 100 points to even break even. So just keep that in mind this week. So again, that will start out with the CEO coming out on Monday, and then we'll get more information all throughout the week. And then again on Wednesday we have the interest rate decision. Again, it's like close to zero. There's no real chance they're going to cut. If they do, it would be very surprising, and that would take the market's legs out if that happened. But I'm not expecting that. But we will have Powell, and that's what's important. So the interest rates will come out, and then we'll have Powell about 30 minutes after that on Wednesday. That's going to be important. Again, people are trying to gauge when he's going to essentially cut. Again, one thing he does do very well is he essentially walks around a lot of questions and is very vague on a lot of things, and rightfully so, because he's aware that people essentially put a lot of weight on every word that he says. So if he says the wrong thing, it can either crash the market or it can move up in the market. So you have to be very careful. So when he's speaking on Wednesday, just be mindful of that and be ready for when that does happen. So that's pretty much what we have for the week. Again, there's some other data stuff, but it really doesn't matter. Those are the big ones I'm watching. Upcoming events. Next monetary policy is until March. Or is this week, and then we don't have one in April, and then we have one in May for monetary policies. So again, if there's no change, it's going to be an emergency cut, which is what I'm expecting is an emergency cut, not a scheduled cut. And then the next core is on April 10th. And then the earnings cycle starts in mid-April. This week, as you've noticed, there hasn't really been much of a change for individual stocks, but this number, I talk about this number all the time, it's going up. So essentially SPX, there's a lot more fear coming in this week, because the biggest stock essentially that's been going on, that's been pushing up the market, has a big conference this week. So if something bad happens with that could be bad. If Powell says the wrong thing, that could be bad. If for some reason they want to cut rates on Wednesday, that could be bad. So it's gone up a little bit. Typically, some of the highest numbers we've seen is roughly around the 120, 130, but that's like you want to talk about like some like pandemic numbers, or even I think pandemic numbers were even up to like 170 or something. They priced in a lot, but they are starting to price in a lot. So you pretty much got to get an 80-point move to really break even. So keep that in mind, that they are pricing in a lot in the index. So it's better this week to be playing individual stocks as opposed to be playing the general SPX, because what they're pricing in. So they're expecting a big move this week, and again, rightfully so. You have Powell, and you have the biggest company or the hottest company right now, having a conference about AI. So AI stocks can move a lot. And it's what's been holding up the markets. If something bad happens, then it can drop the market quite dramatically. And rightfully so. The conference could go good, but then Powell cuts, and so you get Powell cuts. It's not going to matter because it's just going to drop at that point. But you get some mixed signals there, and things may not be so hot. So maybe Nvidia doesn't do good, and it's just another continued pause with not much from Powell. Then that could potentially just lead to more chop. So, which I'm kind of expecting more chop until probably June-ish, like kind of everywhere. Everybody's thinking. I'm more so going off what's going off the earnings. So we'll see what happens in April earnings. We won't get the real like Super Bowl earnings till probably like beginning of May, and then we'll take it from there. So again, that's kind of what we're waiting for. We don't really want to look too far ahead. We just want to look at what's the near term future and where we could potentially be going. So just be mindful of that and moving forward. So, and again, no big move in the individual stocks. So you want to be playing individual stocks this week and not the general index this week. So let's take a look at some charts. So what we got here now, we are at the bottom of the channel here on the daily. Be interesting to see if we break this again. I point this out every single time, but this is when we officially paused here back in October. And we've essentially been up since. Now we've been in this tight channel, waiting to try to break out of this tight channel either direction. I'm thinking more so down. It would be better if we go down for a little bit anyway, especially now that we're coming into March is typically the big month. So we did have a big closeout on contracts on Friday. We'll see what happens on how we open on Monday. We definitely want to be holding above this 5100. If we break the 5100 level, we're looking at potentially that 5030 mark for support. And then if we break that, we're looking at that roughly around the 49 support. So this is one thing I've noticed over the years. The longer you go in the markets, it's typically normally the round numbers or the psychological numbers that typically bounce, but it adjusts a little bit over the years. So not exactly on par. So you can see the zones change a little bit, but and then when you got higher time frames, again, you kind of get a wider zone, which when I typically play on the hourly anyway. So these zones are much smaller, and maybe why some of these zones here that you see, they look off and they're not these bigger zones because these are hourly zones as opposed to these daily zones that I got here. So just keep that in mind. And so, yeah, we'll see what happens. If we can hold there, then we may be looking at potentially going to the 4250 would be the next uptick, and then continue to go from there until, again, I'm expecting the market to go up until we get a cut. And right now, it's just a normal pullback, and then that's pretty much it, in my opinion. I don't expect I don't expect the bears to come in at this point. I know everybody's excited, and that cut's coming, but that cut could be pushed off till next year. We don't know. We were thinking about a cut all next year. It didn't happen. The projections just aren't correct at all. So, but you have to feel how the economy is doing. The economy is not doing great, and that's why I talk about the different companies, especially around earnings, kind of give you more insight. But again, it's very lagging, and so when that lagging information, that lagging data catches up, is when all hell breaks loose and you get emergency cuts, and then you get panic again. Because right now there is no panic anymore, and that is what's concerning. And that's when it typically happens when we roll over. So just keep that in mind. But as of right now, again, we're trying to keep that window not too far, not too distant, but we want to keep it close to try to understand what is currently going on and with technicals in their schedule. We can kind of get a more accurate depiction of when that's going to happen. So again, that's key level this week. We'll see how we open up against that. Let's take a look at Bitcoin. Bitcoin has had absolute tear over the past couple months. It's starting to finally pull back. In my opinion, I think we're at the market in general and crypto, I think, are just kind of in a chopping phase. I expect a little bit of a pullback. But again, unless we have a cut, I don't expect anything major to happen. It's not saying it can't happen. I said if it cut now, it would be fantastic because the timing of it would be great. Then we can really rip towards the back half of the year, which is a normal type of cycle, but you never know how it's going to play out. So we'll see what happens, but really watching. Currently, it's still kind of holding that 68. This is a big support here, but your next biggest support is roughly around that 63K mark, and then you got a little bit of a support here at the 50, roughly around the 52 and the 47. So even if we pulled back, I wouldn't be surprised if we started selling off and just pulling back down to the 52, and then be very short-lived, and then potentially start running back up, like with this spike that we had here. I had this huge sell-off. As soon as it hit the new all-time high, it sold off heavy, but then it was bought up quickly and then made a new all-time high. And again, I still think there's a potential that we could run up to 100K. I'm not saying we're going to hit that. We could surpass that. We could come way under that. But I do believe, typically after you have the halving, which we're roughly about exactly a month away from the halving. When the halving happens, you got about 5 to 6 months before the real true bull market of crypto happens. So I still do believe accumulation through this time. You need to understand, again, this is not financial advice, but in my opinion, on this next push on crypto is when you need to be selling out. And then you don't want to be holding to crazy numbers. That's how a lot of people get wrecked. Again, just my experience and my opinion. But you have to be very careful on this next run up that you want to be selling into strength, not buying into strength. And I've been accumulating all throughout this time, and especially around this last bump here. So I'm gonna potentially accumulate some here as well. And then again, as soon as we get that next push up, which I believe is going to be a big push, because I believe the money printers right after we get that cut, I don't think it's going to be too much longer before we start printing again. And when the printing occurs, that's going to be, there's more injection, and so there's going to be more demand. And then that, I think, is going to lead into another big rally for the market in the short term, right? But it could be really bad. But again, it depends on how bad, because right now you have to understand the disinflation is occurring in some aspects, and the fact that people are running out of funds. So really, where is the inflation coming from is the ultimate question. When that does happen, how does it, there's going to be a very explosive move, I think, after this. And then there'll be another normal pullback here in a couple of years. So again, I think near term, we're going to have a nice explosive move. And then, short term, we'll have a little bit of a pullback again, and then we'll push up again. So, but nonetheless, when it comes to crypto, I think that next big push, whether it's 100K or just over 100K, maybe it's 180K, you could go off of whatever. I would just be very, very careful and be ready for, on this next push in crypto, that's your take profit push, and then essentially wait for the next cycle, wait for everything to pull back before you get back in. But again, none of that is financial advice. And then you got Tesla. Tesla has been selling off heavily. Again, it's a car. It's not really a car company, in my opinion, right? It's a tech company. And yes, there you got cars. They got some of the best. They have the best-selling car, right? I think the Model Y. And the Cybertruck is so popular. Like, all the celebrities are driving it. These are things you need to keep in mind. And that's not including any of the energy storage that they got, which has been exploding lately, actually. And it's not including the humanoid that they got coming on deck. It's not including all the AI they have developed with full self-driving as well, on top of everything, which they can lease that out to companies. You have to understand they're creating a big service-based company that is going to absolutely just destroy people over the next decade. And if all you think is just this is an EV company, you got a lot to learn, because a lot of these companies, you even look in, and something I've started seeing is, we had the OpenAI, they have their essentially humanoid as well, but you have to understand that they don't have the energy packs like Tesla has. Tesla has that whole thing already established. they have the funds to be able to fund this, because you have to understand, to be able in the manufacturing to be able to produce the humanoids at a rapid pace, where you don't have that with OpenAI, right? They may have the tech for the brains, um, which, Elon's been jokes about this, about it being closed AI, but nonetheless, they don't have the proper tools to build these things as quick as they can. Is the way that Tesla is set up for success, to roll easily into humanoids, far easier than any of these other companies. And it's because they've established what they have with building the automobiles, and what they've learned from that. And Elon's been building automobiles and been building rockets at the same time. So it's a much easier process for him than anybody else out there. Nobody even comes close to what he's been doing. So again, I think this is a great value play. This thing has been selling off 30% since the beginning of the year. We're at that level that I was talking about, the 150. Can it break here? Sure, yeah, it could break here and potentially even go down to 125. But in my opinion, again, not financial advice, we haven't even priced in a recession. But once we start pricing in a recession, the thing's already taken a beating. How much more of a beating can it take? I think it can take some beating. I'm not saying it can't. And always expect things can go to zero. But again, I think this is just a huge, huge value play right now. You don't get very many golden opportunities like you do now with Tesla, and it's very rare that it happens. And I think that it can, by this time next year, we may be well over 400 by that point, if not more. That's not even if the humanoid trend starts coming in, because like I said, I'm seeing a lot more humanoid stuff than I've ever seen before. And once that hype starts, you're going to get the same hype that you did with Nvidia. And all it could even be this week. We don't know what Nvidia is going to drop this week, right? What if they're supporting some humanoid or whatever the case is, and then that's going to essentially light the spark, and that's it. And then that whole sediment of humanoids is going to take off, because there's not a lot of public companies that develop humanoids aside from Tesla. So Tesla is a very unique opportunity for everybody, and what it presents to a lot of people. So we'll see how that does play. But watching this critical level, I'm going to continue to buy at these levels, because I really do like this company. Again, not just because of the EV side. Yes, right now it's taking a beating just because all EVs are taking a beating. But again, ultimately understand that is very far from all of just an EV company. So then if you look at Palantir, they've got another big contract this released over the weekend as well. Finally got some actual selling. I'm hoping it at least gets back down to the 20 and tests this level, and then fills this gap here at least and brings it back down to the 17 mark. Really want to start buying again heavier at the 17 and $14 mark. I think we can at least get back to that level. Getting back to 10, I think maybe a little bit more difficult. Again, it all depends on timing, and if we get a rate cut and all that kind of stuff, on how far this could get down. We may have seen the lows at the $7. We may not have seen lows like that again, but we can at least get a pretty low level on this. That's kind of really what we're looking for. And then we will talk about Nvidia real quick, since it's a big week of Nvidia. You can see there's a big bull flag here on the daily. So looking for this to push up to try to retest that 1,000 mark again. Again, you could play sediments. This thing has got so much priced in, and it looks like a really easy move. But what's even easier move is playing the sediments. So playing maybe AMD this week, or playing SMCI has been kind of crazy. Lam Research is another one. Another big one could potentially play this week and potentially play up to the 1,000 marks. The same kind of play. It's lagging compared to that of Nvidia. There is some support here where we're currently sitting at, so this could be a great play this week, and play the $1,000 calls. Again, not calling that out, but that'd be a better play than SMCI or Nvidia at this point. And like I said, even AMD is the same setup. It's at support. It popped a little bit already, but it could have a huge week as well. Snow is another big one that could have a huge week. It's kind of at a support here. It's more of a speed bump than a support, but this could really start recovering this week, and potentially look for that 237 this week. So those are the kinds of ones you want to be watching this week. Even these AIs like Microsoft, it's not as prevalent there, but Google's already started recovering. But those are some good ones to be watching this week. I think, especially with the conference going on, especially on Monday, we'll have to see what kind of hype is brought, and then go from there. So PayPal is another big one. I do really like this one for the short term and the long term. At least the next year or two, I think are going to do really, really well. Maybe the next 3-4 years as well. Did have a nice move this week, but we'll continue to watch this and see how much higher. I think it's going to recover at least what it was back to the $100 mark, in my opinion. So really watching this one close. I am currently in this position. Continue to hold this, at least trying to hold this for the next year. If it does dip more, I'll continue to buy more, at least for the short term, and then go from that point. So BA is another big one. Again, I don't know how this company is even where it's at 182. There's another big panel that fell out of the guts of a Boeing this past week. So for some reason, it's still at 170. This thing is going to drop down or back down to $100. You can flag this video because I can almost guarantee you there's massive amounts of things that are currently going on with this. I don't even know how this thing is where it's even priced at where it's at. Like I said, it's the way that things are going on. If it was any other company, this thing would be like it'd be a penny stock. But right now it's still sitting at 177. So we'll continue to watch and see what it's at a critical support here. So if it does break the support, you're going to get some price discovery to the downside. Not really price discovery, but you're going to go see some pretty nice downside nonetheless. And again, it broke this range here, which it held for so long, and it did hold for almost about 2 months, is now starting to break down. So, and again, it's the big value play. So value starts selling off. That's not a good sign. You want strength across the boards. You want strength across tech, value, and financials. And if that starts to sink, that could be a big problem. So, and speaking of financials, let's go ahead and take one look at JPM. And JPM is kind of holding. Looks like a break and a retest of all-time high here in this support here, which is now resistance. See if it gets rejected and starts selling back off to the 184. If that's the case, that could be a big problem. And then you're going to have some bigger drops here down to 177. Again, the banks don't really move much, so unless there's some big banking news, I'm not really expecting JPM to move that much. But we'll have to see how that does play out. Could look for a retracement here as well on Bank of America, but again, we'll see. So if you made it this far, I do appreciate you. Again, none of this financial advice. Go ahead and drop a thumbs up, and until next time, I'll see you guys later.